Yeah, I'd like it to be an interactive session. First of all, how is everyone? Very fast, like extremely fast. How is everyone doing? You can type it in the chat or you can unmute your microphone. Yeah, how is everyone doing? Doing TPs. Nice one. Nice one. Fantastic. That's from Edu. Fantastic. Ezra saying good, good. Shem Kylie saying doing excellent. Nice. All right, let me have two more, then we start. Two more, just two more people. Let me know how. Ronnie saying doing great. One more. One more person. Just type it in the chat. Awesome, nice, amazing. How are you? Thanks for asking. I'm doing good. Just a little bit frustrated with today's trade. Kulikuwa na bank holiday. Nothing has been moving today. Just been remaining in this balanced form of trading. Jitoka kwa hiyo range the whole of today. Yeah, I can see George saying doing well. Nice. So yeah, nice. So today we're supposed to do two things. Let me see. Today you're supposed to do a simple A plus setup and also how to start with your TradingView subscription. So that's easy. I think we can start with the TradingView subscription and then you can do the A plus setup. So this is easy. TradingView, if you're new to TradingView, they always offer you the 1 month free. Let me try and open TradingView with a different account. Let me just share my screen. Okay, let me first open Chrome. Mm. Am I searching TradingView? All right, let me share my screen. Trading, nice that. All right, so you can see over here. Later on, we'll start using deep charts, but I know it's not so many people, not many of you right now can pay $1,000 for deep charts. But later on, deep charts will start introducing like $80, $80 per month. But as for now, it's just $1,000. Deep chart is what, as we began, that's what I use. So, and for TradingView, just for teaching, that's because many people I can get access to TradingView at the moment. So when I come to TradingView, you'll see here, get started for free. You click, get started for free. Then you want to pick this one, the premium one, not the plus, not the essential, the premium one. Why? Because the premium one is the one that gives you, the premium one, the premium one is the one that gives you the TPO charts and the volume footprints. This is the one that we want to use. TPO, volume footprint. Why TPO? TPO, this is the market profile. Volume footprint, this is your footprint chart, the one that you see, that you saw on my chart before I opened this. So yeah, and then what else? Yeah, so you'll press here, start free for 30 days. You'll sign up. Make sure as you're signing up, use an email that you have never used before. It should be an email that you've never used before. And then if you've ever downloaded TradingView on your laptop, I'd have really used just the web version because the TradingView, there's a I don't know if it's the IP address that it captures. So when you're trying for the free 30 days in Akwambia, you've ever used TradingView before. So make sure you're using an email that you've never used before. Then number two, you're not using it. If you've ever used it on the downloaded desktop version, don't use it there. Use the browser. Then after signing in, another thing that you need to be cautioned about, they'll tell you to use a credit card, of which they'll charge you $0. They're just confirming that it's a credit card that you can use. So they'll ask you for your credit card, put in your credit card on TradingView, then sign up. Your credit card should be a credit card again that you have never used on TradingView. Kama ushalipia TradingView before, use a credit card yenye hujaitumia cause itakwambia that it will tell you, I know there's someone in Uganda who can't understand Swahili. It will tell you that this credit card has been used before. So use a credit card that you have never used before also. So number one, use an email that you have never used. And number two, if you've ever paid for it on the web version, on the desktop version, you'll have to use your browser with the same email that you have used. So you make sure that your browser is logged in with the email that you've never used. Then use a credit card that you have never used before on TradingView. Then you'll get access to this free 30 days. Then after 1 month, you can either repeat the process again or decide to pay for it. So that's how you get the TradingView free subscription. If you can't afford the paid subscription, or if you can't afford the $1,000 for deep chats. Yeah. So yeah, this type of trading requires investments because you're getting access to premium tools. So yeah, that's it for first of all for TradingView before we go on to our A+ setup. So think with this, you can even start trading tomorrow because I've given you access to how to get the free TradingView. Any question on the chat? Any question? Yeah, deep chat is a one-time purchase. It's per year. You pay it per year. They haven't yet introduced the 1 month, so you just pay it per year. This is mine. This is mine. You can see it's paid for, expires on 2027. Yeah. And also you get access to live trading with Kina Fabio, live chatting with them. So yeah. Any question? Let me, well, am I displaying my, let me see if I'm displaying deep chats. Am I displaying deep chat? Okay, it should be I never used on TradingView before. So if you can't afford paying for TradingView per month, then that will be your process killer month. After every month, new email, new email. Let me see if I'm displaying my TradingView. I can't see anything. Are you able to see my screen on deep chats? Hello. I had an internet problem. Can you quick do a recap? The video is recorded. It will be sent to your emails. I'm sorry for not sending the earlier emails. The person who sends emails has not been around today. So he will be around in the next like 1 hour. He'll be available. He had a busy schedule today. So in the next 1 hour, I will send both of the recordings. The one for, was it when? Saturday, and the one for today. All right, I can see John saying yes, you can see. Yeah, so if you ikianza kupata profits kwa trading, I'll advise you move on to deep charts. Yeah, but trading view will serve you, will still serve you well. All right, so let me move on to the next thing. First of all, let me put my my laptop to charge. Don't worry. I didn't mean I started with trading view. Started with trading view. Trading view served me well, quite well. The ability to deep charts gives you even more tools to use, like the heat map. It gives you also the bubbles that shows you big orders. Yeah. Also gives you clear imbalances. But don't worry, with TradingView, you can still use it. I've used TradingView for 1 good year and it served me well. Ah, let me now move on to, do you have any other question before I move on now to our A plus setup? How to look at an A plus setup. Can see you have a question. What about bookmark? Bookmark is quite complicated. Like it serves the same as deep charts, but it's not user friendly the same as deep charts. All right, so I don't know. I'm trying show meeting. Oh, oh. Any other question? All right, since we don't have any other question. Okay, have you tried Kyo? What's Kyotak? What's Kyotak? Kiyotaka. Let me see. Kiyotaka. Let me search for Kiyotaka. What's Kiyotaka? Kiyotaka. Open love plots daily, weekly, monthly, and yearly offense, allowing you to track your price levels and well. I haven't heard of Kiyotaka. I'm just hearing it right now. Yeah, it looks the same. I can see this market profile on this. I can see this market profile on this. I can see you can spot order book imbalance, liquidations, open interest spike. All right. Can also see helps with volume. I can see it as CVD. All right, I'll do more research on this. Thank you. Thank you, Edu. I'll do more research on this. All right. All right. As you can see on my screen now, thank you for all your questions. Now I'd like to move on to the next thing. Now, as you can see for today has been a little bit frustrating. We're just trending around a range. So it must be Japanese. Thought so too. Thought so too. So today I've just been moving around a range. Let's see. Just around this range. This is the footprint. This is my chart. My candlesticks. This is my market profile. And in my market profile, you can see where this red box is where it's between the value area high and the value area low. The moment you come to the value area low, you're going up to the value area high. The moment you come to the value area high, we're coming down to the value area low. And the moment we try to get out of the value area high, we see failed auctions. How do we see failed auctions? Let me just go there. You can see as you're moving up, dark colors, dark colors, dark colors, showing that there are limit orders at that area, preventing us from moving upwards. Another way of seeing failed auction is, let me see, where is it? Over here. You can see what is happening here was the moment you found that breakout over here. What was happening on the CVD? CVD was falling. So you only look at CVD at breakouts, not any other thing. Breakouts and when you come to the value area low. So you can see, or value area high. So you can see at this point, number one, we came here, then instead of CVD rising with prices, CVD is falling, showing that at this point we have passive sell limit orders. That's number one. You can see the colors showing also that there's something preventing us from moving up. Yeah. Let me see something else. Maybe it was there. But that one was a confirmation. So volume was right. CVD falling, candlesticks printing dark colors. Yeah, that's number one. Then let me see another one. If you can see another failed auction on the bottom side where you marked this. Yeah, you can see as you're moving down, as you're breaking down, you're seeing dark colors on the bottom side. Let me see over here. Where is it? This is this part. Yeah, and in a breakout, instead of seeing volume rising in a breakout, you're seeing volume falling in instead. So I'm going to give the principles in a few. I'm just showing you how today was looking. So these are just a few principles. In a breakout, you have to see volume rising, not volume falling. You have to see light colors on the breakout. Then let me see over here. Here, CVD is moving the same way as price. So CVD is slightly falling. Yeah, here CVD is okay. CVD is okay. But this was on Sunday. So this is not valid because it's outside of our trading session. So you look at CVD only in our trading session. This was on Monday still. We are approaching 1:30, 2 a.m. 2 a.m. That's when we have London open. 2 a.m. that's 10 a.m. Kenyan time. And this will change on March. On March, London open will be 9 a.m. Why? If you search online, you will see daylight saving runs from November all the way to March. So that's why we have 1 hour added on our 1 hour added in New York and London because of daylight saving. But once March reaches, daylight saving now will have been 8 to 11, and then it will be 9 a.m. will be the normal opening time. So from March all the way to November, the markets will be opening at 9 a.m. Kenyan time. Yeah. So yeah, you can see that happened. Let us look at here over here. Let's see. Yeah, here. Okay, here we had that happening. That happening. Also, we had a little bit of that happening. So the only thing that we got on this was, let me move on to what was that time? 650, 650, 650, 650. You can see as you're coming to the down part, you can see. I'll show you what an absorption is, but you can see dark colors. Coming to the top part, dark colors. You have to see, if a breakout has to happen, you have to see light colors. Come to the bottom, dark colors, and then you're seeing rejection candles at the value area low. So someone who is trading on ranges, come at someone who's trading today, angekuwa na trade kutoka hapo inafika hapo anatoka, akifika hapa na trade hapa anatoka. So quick scalping, ikifika hapo inafika hapa anatoka. So just by using the market profile, marking the value area high and value area low, you will have, and this is today's value area high and value area low, not the previous day. So, and how we do is you have to mark the previous, because what I was looking at the previous value area high. I was waiting for us to come here. Then so they used that today is a US bank holiday. That's why we have these ranges. So I was expecting prices to come here, but since it was a balance today, just trading around today's value area. So again, let me see. Again, you see, when you came here, we had a little bit of dark, light colors, except this is a point of control. So this one should not, this one, you have to see dark red or dark green. The black just means the point of control. So you can see when you came here with that, we had that rejection candle, but still had some light colors. Then as we came back and retested, dark colors came in. So continue going up, testing with rejection. You can see we're just rejecting the value area high, coming back to the value area low. So today was just trading in ranges. You can see immediately tried to come out. We had an indecision. Now this is what you want to see. You see over here, this is what you want to see. When you break out, you have to see light colors. But this one was a failed one because volume never shifted that much. Again, I'll give you the principles at the end, and also you had a negative delta. Delta was negative 1.5%. This is a percentage delta. So you have to see breakout with light colors. That was a nice confirmation. Breakout with light colors. And then you have to see volume rising, of which volume rose slightly a bit. But who was in control? Sellers were the one in control, because you can see the delta percentage. So that one, in terms of no, you can see this is what is happening right now. Just testing around the value area high. Yeah. And see even right now we're trying to break out. But today is a bank holiday. We'll just remain in ranges. Yeah. So I've given you just something short. Now I want to go to the principles. I promised to give you an A+ setup. Yeah. I hope watu wenye wako kwa premium class watasikia vibaya. But I'll just give one A+ setup. I'll give how to trade breakouts. Yep. How to trade breakouts. No, do I trade? No. I'll teach on how to trade absorption. An absorption, a test to the, yeah, an absorption is a good one. That's an A+. Okay, both are A+, absorption and breakouts. Let me teach an absorption because that's what happens most of the time. So boom, 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 boom. Go to candles. Don't want to delete anything. Then let me move here down. I know, let me open freeform. So I think most of us tumekuwa from the beginning, from option market theory to market profile to order flow. Don't have to repeat much of some things. So yeah, let me start. So you have two states. You have either a balanced state, the one that you've seen right now, or an imbalanced state. So market moves from either a balanced to imbalanced state. You don't have any other state. So in this balanced state, this is a state where both buyers and sellers are in agreement. How do you write agreement? Just know it's agreement. They're in agreement. So this is your profile, you can see. So both buyers and sellers are in agreement. This is your value area high, this is your value area low. Also, this is your balance profile, your value area high, value area low. So they're saying that we are willing to transact in this range of price. You're comfortable sitting here. It's like, I gave the analogy of a MacBook. A MacBook ikitolewa, we all know MacBook ikitolewa, the prices range from $1,000 to $2,000, depending on the type of MacBook that you're buying. So that's the price where buyers and sellers are. Someone is willing to buy a MacBook within that range or sell a MacBook within that range. So both buyers and sellers are in agreement in this specific range. So what will happen? What needs to happen is something has to shift for either value to, okay, something has to happen for value to shift from this level to this level, or from this level down to this level. And we call this trading inside a range. We call it responsive trades. Responsive. And trading outside a range, we call it initiative. Why do we call it responsive? Call it responsive because if a buyer tries to take prices all the way to, let's say, the MacBook. So if someone is selling, if someone takes the prices all the way, if now the auctioneer, not the buyer, the auctioneer, which this now is the shopkeeper, if the auctioneer takes the prices all the way to 4,000, no one will be willing to buy this MacBook at 4,000. Well, when you know very well that the prices range from 1,000 to 2,000. So these prices will be rejected. And the auctioneer, since there's no buyer willing to buy at that price, he'll be forced to take prices down. And that's where sellers come in and they take prices down. And as prices come down here, the auctioneer, once he takes prices down, let's say unajua MacBook ni $1,000, $2,000. Then mahali wane MacBook inatoka $800. You'll quickly want to buy that MacBook. And because this point at the value area low, we call the value area high premium. We call the value area low discount. So because now you're seeing prices that are discounted, you're seeing the MacBook at a discounted price, now you'll want to buy. And this is the point where buyers will step in a lot. And then they'll force prices to move up. So this is trading in a range. So both buyers are responding to low prices. Buyers they're responding to low prices. And sellers are also responding to high prices. So assuming now the MacBook, wamesema that the new MacBook, they did a mistake. Si M5 Pro chip ni M8. That's the most powerful Pro chip. Waseme tu, wametoa M8, that's the most powerful Pro chip that MacBook has ever had. and that will force prices now to go up. Now, that's the value of MacBook now will have to shift from 1,000 to 2,000, maybe to like even then, even let's say $3,000. Now, value of MacBook has shifted. Now, you may shift because of a value shifted because of something of value came in to show that the value of MacBook is quite high. It's like gold. Gold right now, you're seeing gold might go higher and higher and higher because of central banks are buying gold at a record pace. Yeah, and the value of fiat currencies is going down all around the world. So gold will always continue going up. So your goal as a trader is find the best low prices to enter and now ride the wave as gold is going up. So something came out to show that the price of the value of MacBook has shifted from 1,000 to 2,000 to maybe 3,000 to 5,000. So now prices will have to shift from here to here. And therefore, someone who will be able to catch price at $1,000 na anajua price iko karibu kwenda to $3,000 will buy. So people will buy. Now price ikienda 1,500, people will continue buying. People are willing to pay higher and higher prices. 1,600, someone is willing to buy. 2,000, because they know value ni around 3,000 to 5,000. So, but if prices is still moving up na itafika hapo, they'll be willing to pay worse and worse prices hadi price ifike hapa. Until now they're in agreement. Now this will be the point of agreement. Then prices now enter into a range. I'm sorry for those who don't understand Swahili, but good thing there's AI. It can be translated using AI. So yeah. So that's why prices enter into ranges and into imbalanced state. So this is a balanced state, balanced. Then this is, then this is, sorry, imbalanced. Yeah, we can see balanced state, imbalanced state. That's how it is. So let me give you how to trade. Which one do you want? I'll pick the one with the most votes. You want to learn how to trade a balanced state, or do you want to learn how to trade an imbalanced state? And let me help you in making this decision. The market spends 80% of its time in a balanced state. That's something that you can search online. The market spends 80% of its time in a balanced state, 20% in an imbalanced state. So pick the one that you want. Do you want to learn how to trade a balanced state, or do you want to learn how to trade an imbalanced state? I'll just give one for today. And that's it. If you want to learn others, you can join our, what is this called? Our premium classes. Yeah. Both. Not giving out both. Balanced, imbalanced, okay. We are over 18. I'm expecting around 17 votes. One, two, three, four, five, six. Balanced, imbalanced, both. It can't be both. Your vote is disqualified. Invalid vote. Balanced. Okay. Balanced, okay. right. You've already taught us the balanced and how to approach it. Imbalanced. A change to imbalance. All right, let me see how many votes we have. One, two. Okay, for balance, we have one, two. Okay, I see people changing their votes. Okay, I'll count the ones that, even if you've changed, I'll just count yours. Yeah, we have balanced one, two, three, four, five, six, seven, eight, nine. Okay, you have nine for balanced. Let me count imbalanced. Imbalance, we have one, two, three, four, ikiwa tie, five, six, seven, seven. So balanced habits. So I'm going to teach on balance. All right, so let me wrap this. I can see someone saying balance that's about to go to imbalance. Yeah. You're trying to rig votes. Aye. So number one, first of all, let me see what prices did. Prices copy. So let me just share something before you continue. Let me share something before we continue. I've seen. Okay, I'll be sharing. I'm not sure any breakout. If you look at gold right now, you can see it broke out from the balance state to the upside. So if I share that, I'll be sharing your breakout. So no, yes, Tasha. Let me. Where's my pen? All right. So let me delete this. So you require number one, CVD. This tool, you want to make this tool your friend. You want to make this tool your friend. Look at something kidogo too. Mhm. You want to make the CVD your friend. This tool. This tool will help you a lot. The cumulative volume delta. I won't go into the principles of what cumulative volume delta is. I'll just teach you how to look at it. Then on footprints, what you need to observe, if you're writing the notes, to observe number one, a rejection candle. a rejection candle, dark colors. Dark colors just means orders zimekuwa mingi until the candle can turn dark at that price level. Orders zikiwa when orders kama kuna any form of passiveness, like there's no wall, prices move. When there's a wall, prices don't move. So dark colors ni kama ukuta, it's like a wall. Rejection candle, dark colors. What else do you want to see? Let me just give those two. On CVD, what you want to see is price divergence. It was, oh, you want to see also just at your value areas. You know value areas, that's value area high or value area low. You just put it in brackets. VH, VL. Just to take note, for those who haven't yet opened their account with FP Markets, then we'll do the opening registration on Friday. So just take a chill kidogo, wait on Friday, and on Friday we'll start account opening. Why? Because FP Markets, I told you FP Markets walianza kuingia from last year December. They're a new broker, ebook broker worldwide. That's the only ebook broker we currently have in Kenya. HFM is a hybrid broker. That's why we're shifting from HFM. Watu wa Valetax, This jaribu karibu Valetax. Uko mpenda kumanipulatea pesa zenu. So just follow what I'm telling you. Just wait till Friday. We'll start registering you because at the moment, that's what they're setting up their systems and everything. I have a meeting with them tomorrow. Valetax is just good for, let's say, IBs, because IBs wanaenda kusikia vizuri huko juu wapate rebates, na kama IBs, by IBs namaanisha introducing brokers. These people wanasema, oh, click link in my bio. Why? Because mtaongezewa spreads, and when you're trading this type of trading hautaki kuongezewa spreads zaidi yenu. So yeah. So CVD, price divergence, footprint, rejection, candle, dark colors, test at your value areas, value area high or value area low. So ni hizo. So let me start. Trying to look for my pen. Here's my pen. Here's my pen. Nah, not this one. That's my pen. I just keep going just a button. Why is it my pen? Nope. It connectors. Pen yangu ya Zoom imeenda wapi? Kuna mtu ametaka jina nimeongea kuhusu Valetax. It's okay. All right. So I'm trying to look for my pen. Oh, wait, I find later. Add sketch. Okay. Sorry. All right, let me just close it, then open it again. Oh, there it is. So this is your balance state. Yeah, I've seen your private message. I'll reach out to you once you're done with this class. And yes, we take account management. I'll start taking account management from next week, Monday. Not anything less than $5,000. And for those who want to join the premium class, there's information on our website, anakazotradingacademy.com. Let me just type it. anakazotradingacademy.com. That's the website. So yeah, so talked about responsive. So once we come here at this point, that colors represent limit orders. There's a wall that we're hitting. So we want to see dark colors at these points on your footprint chart. Dark colors at this point on your footprint chart. We have also something known as failed auction. I will not talk about failed auction here. Let's talk about balanced market. Failed auction ile tu umetoka hivi, then umerudi back. So you want to see the colors. You want to see a rejection candle, or it can be a quick, then an engulfing. And see that you want to see an absorption taking place. I forgot to write an absorption. An absorption simply means it's like a sponge. Maji imeabsorbiwa. So when you move up, then huku juu, you're seeing, let's say 50 buyers. Na hapo unaona like 10 sellers. So your question will be, who has moved these prices down? Yeah, you'll be asking yourself, if you have 10 aggressive buyers at this point and 10 aggressive sellers, what moved these prices down? There has to be someone sitting here passively. So that's an absorption. Simply, that's an absorption. Aggressive buyers being absorbed, ama kama ni side ya sell, aggressive sellers being absorbed. And you see a rejection candle. On the CVD, you want to see price divergence. If price ni effort. So price, this is price, then which in is CVD. So price represents effort. The effort of aggressive sellers to take prices up, and CVD represents results. So you're seeing price is going up, but kwa CVD, okay, kwa price unaona higher highs, kwa CVD unaona a low being created, ama inabaki tu ina range. Hakuna high inatengenezwa. So that means also an absorption is taking place. Prices, instead of effort matching your results, you're seeing the opposite. So you want to see those. For one, CVD divergence. Keep this. We also use something called VWAP, but I'll not mention VWAP here. So CVD, this is your number one tool. if you can leave every other indicator and just stick with CVD, cumulative volume delta, this will help you. So CVD, price divergence, and you only, note this, you only look at price divergence at when you test the value areas. Nothing else. Usiangalie hapa, you'll get mixed signals huku. You only look at it at the value areas. Mark that. Inafaa kuandika na red pen at the value areas. What else? Rejection candles, dark colors, yeah, mention absorption, divergence. Yeah, I think that's simply it for the balance. And just to show you, I think when we began this class, I showed everyone how. Let me just remove this. Let me share desktop too. Let me remove this. All right. So you can see over here, that's number one. Prices broke out. CVD moving down, showing failed auction. I want to look at a good one. There's a bank holiday, so you have a bit of slight mixed signals. Over here, it was okay. It followed price. Here down, CVD is moving down. Let's see somewhere. You can see over here also. As the video is coming to test here down, to still rising over here. This one is okay. This one I mentioned why. You can see over here. As it is coming down, what was happening to the CVD? CVD is still moving up. What else? Yeah, there's a likelihood prices will go down, as you can see over here. What is happening? There, and what's happening to the CVD? CVD is like quite broad, but it's not with the same level with how this one went. Do you see dark colors on the top side? No, there's no dark colors on the top side. It's only dark colors on the bottom side. And then with this breakout, you can see volume increased. Then delta jumped from 6% to 25%. That's a big jump on a breakout. I've given you something on trading a breakout. If you caught it, well and good. So yeah, then on the colors, this is what you want to see. You can see there's a difference between this dark colors on the bottom side and this. There's quite light colors. Skip the dark, this dark part. This is just the point of control. But generally upwards, you see light colors. Light colors on the top part. Only dark colors are moving down. Here you can see rejections. This rejection had no light color, but the next one you got a confirmation with dark colors. This one, no confirmation of dark colors, just light colors. Yeah, no confirmation, light colors on the rejection. But once we came and tested back, dark colors over here, light colors, then went up. Aggressively went up with 12%. That was a good buy signal. This is a nice one. Light colors on the way up. Nice percentage delta increase, volume increase, slight volume increase. Then we came, tested again with dark colors, then prices moved up all the way to the top part. What else? Let me see. You can see over here, came, tested, rejection candle. You can see the rejection candle is like it's repeating itself. Hapa, hapa, hapa. So also just having you marking your value area low, value area high. Ukienda to rejection hapo, that can be a you can use that also as a buy signal, but we want confirmation also on the CVD, because this can just be a rejection, then slight up, then move down. You see rejection, rejection, dark colors, rejection, slight dark colors on the top side. You can see this one, we broke with light colors, but as you're approaching, dark colors on the bottom side, dark colors on the bottom side. Now, as we're trying to move up, dark colors, dark colors. This one, we broke. Now, this is a good example of a failed auction. We broke, and as we're breaking, what is happening to volume? Volume is reducing. And as you're breaking, you want to see, itaanza kuspill nini ya imbalance. You can see broke with some light colors. This is a nice break, just few dark colors. Broke, retested, ranged kidogo, retested again with dark colors. There's a nice one. Came down, as it came up again, dark colors. Then we shifted, started moving down vizuri, light colors on the bottom side. Then tukakuja hapa dark colors. Hapo ndo kakuwa na a slight wall hapo hivyo. Na ukiangalia mahali hapa iko, if I move all the way to hapo, so you had that large momentum candle buy with volume increase. So yeah, that's simply it. There's more to this. With only that, you can use that to trade effectively and make better trades. So I think we're done with today's. Kama ni mnoma, hii trade ungekuwa ushaingia, but use good risk management. Let me see if you're moving up with light colors. Yeah, on a retest, volume dropped. So yeah, as you're moving up, delta percentage is increasing. So I think we're done with today's class. The recording will be sent. And yeah, that's it. See you all. We'll meet again. We'll meet again when you're doing your account registrations with FP Markets. I'll let you know. Yeah, when you'll be doing it. If you have questions, you can reach out to me or you can type it on the chat. And also, if you want to do account management, you can again reach out to me or you can type it on the chat. Well, something like account management that's personal for you, you can just type it. You can just send it to me. Personal my number. So I think with that we're done, and see you all till the time that I'll type on the WhatsApp chat. I'll communicate. So yeah, goodbye and love you all.